What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw the stock market testing very critical support levels, and so far those support levels are holding up. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we did have a volatile day, but we still saw SPY closing in the green, going up 0.13% today and closing right on top of the 5 EMA. Now it's very important during this time to stay objective, and being objective means that you're following price action and trend and leaving your bias at the door. If you're looking at the price action and you're looking at the trend, you still have to be bullish because the price action did bounce off of that critical support today. Remember, in any bull market, when you have a positive sloping 20 simple moving average and you have the full bull trend, your most critical support level is going to be your 20 simple moving average and your 50 EMA. And today we saw SPY decisively bouncing off of that 20 simple moving average. We undershot it by a little bit just to fake out some of the bulls and get them to panic sell, and then blast it off and close higher for the day. So right now you have to be objective and you have to still look at this as a strong bull market that's not just going to roll over and die easily. That critical level at 465 is being respected, and we need to decisively close below that level for at least 1 to 2 days before we think the stock market is rolling over. If you're looking at closing prices, from the previous all-time high of closing prices till today, SPY is only down about 0.34%. So there's absolutely no reason to be overly panicking when the stock market is only down about 1/3% from the previous closing all-time high. I know that we had a lot of volatility, but if you're being objective, we really haven't gone much of anywhere and we're just going sideways, consolidating above critical support and getting ready to build a base and foundation to launch from to build that next leg higher, which could take us to SPY levels of 477 and possibly higher. So for the time being, if you're staying objective, it still looks like we are going to get a Santa Claus rally as long as we see SPY staying above about 465 and 462. Now also pay attention to the Bollinger Bands because that lower Bollinger Band is sitting above the 50 EMA, which means it's not likely we're going to go down to the 50 EMA when the lower Bollinger Band is not even allowing for price action to go that low. So right now, I just think you need to stay bullish and we don't see high volume selling. We saw a little bit of selling yesterday and we did see a little bit of increase in volume, but there was absolutely no follow through with today's price action and we did not see high volume selling today. So as always, we'll be objective right here on this channel, and right now we need to be objectively bullish because price action and trend are still bullish. So look for that critical resistance level right around 471 because if we break back out above that level, get ready to see the stock market running up for that next leg higher, which will be right around SPY 477. On the NASDAQ 100 triple Qs, we were down 0.46% today, and again, we did test critical support. We see the NASDAQ 100 is going down on increasing volume, but if you did watch my video from Sunday, you already know we were expecting to see the tech sector selling off a little bit in favor of some of the other sectors. So by far, this really shouldn't be that shocking because we had a very clear 5-wave advance, and on the weekly macro analysis, I showed you that the triple Qs were overextended, and here we are seeing the triple Qs cooling down. Remember that macro level analysis I do is very important because it weighs more heavily on a chart that has a weekly scale than a chart that has a daily scale. So we're seeing that macro level analysis paying off, and we did get rejected from that resistance, but most importantly, we see critical support levels holding up. Our critical support on the triple Qs was at 394 and we did bounce off that level, and we still do have a bull trend. So while we need to see the triple Qs cooling down a little bit, we don't necessarily need to see the triple Qs rolling over and dying. So watch that critical support at 394, and if we break down below 394, the next critical support will be at 388. The 50 EMA on the triple Qs is within the Bollinger Bands, so the other critical support level will be right around 383 if we do break down below about 394 and 388. So remember, we have the bull trend and we are bouncing off support, so it is possible we do go for that next leg higher. To the upside, look for resistance at 401 and our price target sitting up here at 409. If we start breaking out above 409, that is incredibly bullish and we could see the triple Qs running to the 420s. So pay attention to the triple Qs and watch the volume, and if we do break down through critical support and we see an increase in volume, you will want to get a lot more defensive because it's very likely the triple Qs are coming down to 383 and possibly even lower. In the Dow Jones, we're seeing exactly what we expected to see with money leaving the tech sector and flowing into the Dow Jones. We went up on increasing volume, so this is definitely very bullish, and we see the Dow Jones going up over 0.5% today. We're basically bouncing off the 50 EMA, even though we never got a direct touch. That's just fine. It's more bullish that we're actually bouncing before we get to that level. Now, we can't get overly bullish until we see the Dow Jones clearing back above 360, but by far going up on increasing volume and bouncing off of that 50 EMA and closing with a green day on a day like today is definitely bullish price action. We don't have the daily bull trend, but we could easily get that back if we start closing back above 360. This looks like a very clear ABC correction, so it does look like the Dow Jones could possibly start heading back higher soon. So watch resistance above at 360 and 365, and if we break out to a new all-time high, the price target will be 372. Now to the downside, we have that critical support at 355 that we have to hold above. If we start closing below 355, that will be a bearish breakdown, and it does mean the Dow Jones is likely coming down to 351 or these gap closes in the 340s. So pay attention to critical support, because that is by far the most important thing you need to pay attention to across the market, and on the Dow Jones that will be at 355. On the Russell 2000, we were down 0.17% today, and we did test that critical support at 229 and 230. The good news for the bulls is so far that level is holding up as support, and we did see a very strong bounce in the Russell 2000 because the low of the day was in the high 228s, and we closed all the way up here at 231. We're just below the breakout level, which is right around 232, but we are holding above the 50 EMA, which is sitting at 230. So by far the most critical support for the Russell 2000 will be right around 229 to 230, because if we break below that level, we're more than likely coming down to close this gap, which is just below 223, and that's also where our strong support trend line will be. So on a break below 229, we're very likely coming back down to about 223, but as long as we see the Russell 2000 staying above 230, we could break out back above 234 to 236 and go back into another bull rally. We have price targets above at 245 and 250 if we do start getting those bullish breakouts. So pay attention to that critical support, which is definitely the message I'm trying to deliver across the board, because if you're staying objective, you have to watch these support levels. And if we lose these support levels, the bears will start to raid these indices and we could see much lower prices. On the ARKK ETF, we were down 2.33% today, and we continue to see more pain for Cathie Wood's ETF. By far, this is definitely starting to look like capitulation, where we're just waterfall selling lower, and we're trading way below the lower Bollinger Band, and now we're slicing through support at 107. So the inverse head and shoulders is out the window, and we did have even a potential of a double bottom off of 107, and that's even starting to look less and less likely as well. So more than likely, we could be seeing the ARKK ETF capitulating, and it's just getting overextended to the downside. I'm wrong if we can't see ARKK breaking back out above about 119 to 120. Otherwise, ARKK is going into a bear market, and we're going to continue to see lower highs and lower lows. So if we're going to get a lower high, it's going to look something like this, and then we're going to get rejected, and we're going down for that next leg lower. So we need to break back above about 119 to 120 to reverse this bearish trend. But by far, you have to follow the price action and trend, and on ARKK, they are looking bearish because we did break below 107. So you need to be a lot more cautious of downside and consider the possibility that we're going to form a lower high and continue to head lower. Now, if we do start heading lower, the next support level is all the way down here at 99, and that should be a strong support level. The problem with the ARKK ETF is that we're going down on extremely high volume, and if this is not capitulation, we're going to see a very prolonged bear market in this ETF. So pay very close attention to this 107 support level, because if this is a false breakdown, we should start to bounce very soon, and we will need to make sure we start forming higher lows and higher highs to start back into a bull trend. Otherwise, pay attention to that price target and support level below at 99. On the VIX, we were up 1.1% today, and we did see the VIX spiking up to about 20.9, but did not fully close the gap at 21. Is that close enough, or are we going back up there to close that gap? Only time will tell, but we definitely see the VIX looking a little bit bullish with a higher high and a higher low. Now, the good news for the bulls is that the VIX did not close above 20, and remember I told you the VIX needs to close above 20 if we're going to see a deeper pullback. So far, this is still fitting my bullish theory that we're going to see the VIX spike, and it's going to be a buy the dip opportunity, and then we're going to see the VIX getting crushed back down below 18.2. So if the VIX closes above 20, I was wrong and we're going through a deeper pullback, but so far it looks like I could still be correct, and the VIX is going to start getting crushed from here. Going into the Thanksgiving weekend, we could see a lot of bullish activity that crushes the VIX back down below 18.2. So for the time being, this is still buy the dip off critical support, which is great risk reward ratios. Jumping over to Bitcoin, we can see we're up about 2.5%, and we are seeing Bitcoin double bottoming off of 56,000, which will confirm if we break back above 60,000. So far, I still think you need to buy the dip on Bitcoin because we are in a macro level bull market. Watch these support levels at 56,000 and 53,000, and get a lot more cautious on Bitcoin if we start breaking below 52,000. The bullish breakout will be back above 60,000 and the bearish breakdown will be down below 52,000. So those are your critical resistance and support levels. Remember, if we break out to a new all-time high, my price target will be 75,000. And then I think if we break above that, we could get to 86,500. None of that matters if we break down below 52,000, so watch that critical support level, and for the time being, continue to stay bullish on Bitcoin. On Amazon stock, we were up 0.21% today, and we continue to see Amazon cooling down ever since it hit my price target at 37.60. We still have the bull trend, so you can still try to buy the dip, and your support levels to do that will be off at 35.52, 3,500, and 34.52. Any of those levels you can buy the dip, but if we start breaking below 34.52, you need to get a lot more cautious because we could be coming back down to 3,400 or 33.11. But overall, this is a full bull trend with bullish price action, so don't be afraid to buy the dip as long as we're above about 34.52. On Tesla stock, we were down just over 4% today, closing just below the 20 simple moving average, but still looking relatively bullish. Remember that I told you the highest probability chance is that Tesla is going to form a bull flag, and so far it looks like that's exactly what could be happening. Remember, we're looking for this potential bull flag to last multiple months, which could take us out to either the middle of December or year end. At that point, I would expect to see Tesla making up its mind on which direction it's going to go, and we're either going to break down below $1,000 and come close these gaps below at 900 and 840, or we're going to break out above the gap close above at 1200, break out above 1240, and then go start heading up there to that price target at 1400. So right now, continue to be patient on Tesla, and if you're trading this stock, you're trading it between the range at 1050 and right around 1218. It's more than likely going to ping pong around unless we break through one of those levels. So watch support right around 1015 and the breakdown below 987 and the resistance right around 1208 or the breakout above 1240. That's what I think Tesla stock is more than likely going to do. So continue to stay objective and follow the price action on Tesla stock, and don't take too many bullish or bearish bets if it's planning on just going sideways. On Apple stock, we were up about 0.25% today, and we still see Apple stock looking very bullish with the price action still closing outside the upper Bollinger Band, and it does look like we bounced off the 5 EMA as support intraday. We still have a very strong bull trend, and we just had a very impulsive bull rally that blasted through all the resistance levels. So we're at all-time highs on Apple stock, so you need to get cautious at all-time highs. But we do have this price target at 162 that was met, which means we don't necessarily need to go any higher. If we start closing above 162, it will start validating new price targets, and you can see they are up here at 166 and 168. Don't look too far ahead, wait for the confirmation of the breakout, and do understand I don't like chasing something that went parabolic. If it were me, I'd be locking in my profits and not worried about another $4 gain, but I understand some of you love this stock and want to milk it for every penny. So wait for that breakout above 162 and then look for those price targets above. But if we start breaking down, you'll see price action slicing back through 157. So watch that strong support at 157, and the strongest support is still down here at 153. If we start breaking through some of these critical support levels, you need to be a lot more cautious because we could be ending this bullish run and due for a correction in Apple. On the financial sector, we had a very bullish day going up 1.57%, and the price action is back to looking bullish above all the moving averages. It looks like the financial sector is trying to break out and could be going for that next leg higher. The industrial sector was up 0.17% today, still with bullish price action and still with the full bull trend. The healthcare sector was up 0.11% today and did successfully bounce off the 50 EMA, so we are seeing critical support holding up. The energy sector was up over 3% today, but still closing below a negatively sloping 20 simple moving average, so it does look like we could still be heading lower in the energy sector. So jumping back over the S&P 500, you can see that we are testing critical support, and so far the bulls are winning. This is a strong bull market with a strong bull trend, and so far we're seeing price action bouncing off of strong support. If we see strong support breaking down and we see price action slicing through these critical levels, then we can start flipping the script and we can stop being so bullish. But I'm going to remain an objective bull in a bull market, and there's no reason that you shouldn't as well. Trade with the direction of the trend, and the trend is still incredibly bullish, and the price action is still above critical support. That's what it means to trade objectively, and we don't care about any other noise or anything else that's going to come out, because there's absolutely going to be plenty of that, and we already know that there's always going to be plenty of noise. We block it out and we stay objective and we follow the price action in the trend, and that's why we're on the right side of the trade 9 times out of 10. We're going to get it wrong sometimes, but if you've been following me for any amount of time, you know that we've been on the right side of the trade for the majority of this time, and we're constantly crushing this market. Also, don't forget to take advantage of my Black Friday deal on Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades TQQQs. You get all of your buy and sell alerts directly via email and text message, and now with the 67% off coupon code, now is the best time to try Bank Trade Alerts. If you're interested in trying out Bank Trade Alerts, you can find out all of the details and how to apply the Black Friday discount deal by clicking on the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly to help you absolutely crush this market. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the links below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.